Welcome to The Explainer. You know, most of the time when you listen to a company's earnings call, you get these carefully scripted presentations. Well, today, we're skipping all that. We're jumping straight into the good stuff, the live Q&A session. This is where Wall Street's sharpest analysts get to grill the leadership of BlackRock, the biggest asset manager on the planet.
So what do these analysts really want to know? We're going to go behind the curtain of their latest earnings call and listen in. Because the questions they ask, well, they tell you everything you need to know about the real anxieties and the massive opportunities for a company managing, over $13 trillion. Yeah, this is where you find the real story.
All right, first up, we've got a question from Bank of America. And the analyst, he immediately zeroes in on this one huge eye-popping number. You can tell what he's thinking. Is this for real? Is this growth just a one-off, a flash in the pan? Or are we looking at the beginning of something much, much bigger?
And here's the number that had everyone talking, 10%. A 10% annualized organic base fee growth. Now, to give you some context, that is their highest number since 2021. It's way, way above what they were targeting. So a number that big, yeah, it definitely demands an explanation.
Exactly. So the analyst wants to peek under the hood, right? He's like, okay, we all know your ETF business is an absolute monster. But his real question was, where else is this coming from? What are the other big drivers? He was digging for the real story, looking for those diversified sources of strength.
And BlackRock's answer was pretty clear. It's not just one thing. It's everything. They're firing on all cylinders. And what's really fascinating here is the mix. You've got their bread and butter businesses, ETFs, big outsourcing deals, right alongside these brand new growth engines. We're talking digital assets, high-value active funds, the whole spectrum.
And this is the real kicker. They said the fee yields on these new assets, they're 6 to 7 times higher than last year. So let that sink in. It's not just about getting bigger, it's about getting smarter money. They're attracting assets into much more profitable areas. This isn't just random growth, folks. This is a deliberate, fundamental shift toward higher value, higher fee business.
Okay, so sticking with this theme of what's next, an analyst from Morgan Stanley completely shifts gears. He moves the conversation from today's numbers to tomorrow's revolution. And he asks about one of the most exciting and frankly disruptive ideas in all of finance right now, tokenization.
And the potential here, it is just staggering. BlackRock points out that there's already over $4.5 trillion just sitting in digital wallets. Think about that. Trillions in crypto, in stablecoins, all these digital assets, but they're basically cut off from traditional, high-quality investments. It's a massive, completely untapped market just waiting.
So what exactly is tokenization anyway? Well, think of it like this. It's about making a traditional asset, like a stock or a bond, speak the language of the digital world. You basically create a digital wrapper for it, a token on a blockchain. And once you do that, it can be held, traded, and managed instantly, 24/7, right from a crypto wallet.
And look, BlackRock isn't just daydreaming about this. They have a very clear step-by-step game plan. Step 1, they launched foundational products like a tokenized money market fund to test the waters. Step 2, they're now talking with all the major digital platforms. And the big vision, the end game, to put their crown jewels, their famous iShares ETFs, directly into every digital wallet.
And this really shows you what they're aiming for. They envision this totally seamless financial world. Just imagine for a second, one single place, your digital wallet, where your crypto and your long-term retirement savings live side by side. You could manage it all with a tap, with lower costs, instant settlement. That is the future they are actively trying to build.
All right, next, the conversation takes a sharp turn into a real hot-button topic. You see all these nervous headlines about bankruptcies and financial stress, right? So an analyst from Goldman Sachs just comes right out and asks about the elephant in the room. What is the deal with private credit? What are the real risks in this booming market?
And BlackRock's response here is fascinating because they basically go down the list of market anxieties and dismantle them one by one. They say, look, those bankruptcies you're reading about, that's happening in the public markets, not in our private lending books where we have way more control. They see any reports of fraud as isolated cases, not some systemic problem. And all that volatility that's scaring everyone else, they see it as the best time to put money to work. It's a completely different perspective.
Okay, so shifting gears again, but this time back to BlackRock's home turf. An analyst from JP Morgan asks about the future of the product that basically made them famous, the ETF.
Now,
There's a new rule on the horizon that could totally change the game. For decades, you had mutual funds over here and ETFs over there, two separate things. Well, this new rule could let mutual funds create their own ETF share class, blurring that line completely. So the billion-dollar question is this a threat to BlackRock's dominance, or is it just another powerful new weapon for their arsenal?
And BlackRock's answer? Not ambiguous at all. They see this as a huge opportunity. Why? Because it would let them take their successful old-school mutual funds, the ones with these amazing long-term track records, and basically give them a modern ETF makeover. It's a brilliant way to capture even more of that money that's already flowing from the old world to the new.
And finally, the conversation turned to something that affects, well, pretty much all of us, retirement. An analyst asked how a company with the sheer scale of BlackRock is positioned to help tackle the massive retirement savings crisis we're facing, particularly in the U.S.
See, for decades, the big players, huge pension funds, university endowments, they've been using private markets like infrastructure and private credit to juice their returns. The big idea now is to bring those same tools, that same opportunity, to the rest of us, to the everyday person's 401k plan. It's about unlocking totally new sources of growth for everyone.
So what's different now? Well, according to BlackRock, after years and years of just talk, things are actually starting to happen in Washington. There's real regulatory momentum. You've got a president's executive order, the Department of Labor and the SEC are actually coordinating. All the pieces are finally moving into place to make this happen. And that could unlock a simply massive new market. But here's the really clever strategic part. If these retirement plans do start using more complex private assets, they're going to need the data and the analytics to prove they're making a good decision, right? It's a legal requirement. And guess who provides that kind of high-level data? This creates a brand new, huge market for BlackRock's own technology platforms like Aladdin and Preqin. It's a brilliant move. So when you step back and connect all the dots from these questions, you've got tokenization of assets, the blending of public and private markets, giving 401ks new tools, and then selling them the data to manage it all. It really makes you wonder, are we just watching an asset manager grow, or are we watching BlackRock build the entire financial ecosystem for a completely new digital age? A powerful question to think about. Thanks for joining us for this explainer.